get back to the class. So earlier I mentioned about just random thinking on how important it is to balance your life, which is not a cliche, but something that all of a sudden came to be very true. But yeah, we're coming to the topic for today. We're going to talk about how what does it mean to scale intelligence, and in what ways are we trying to scale intelligence on an entire planetary scale, from data centers, compute powers, to distribution channels, to workflows. So it's not about trying to define a specific industry. For example, last week and the week before last week, we're mentioning on a specific niche, or it's warehouse, or it's AI agents, or it's edge computing. We are talking about scaling intelligence overall, and what kind of market opportunities are coming along with it. And the person we are going to talk about today is Sam Altman, and he is also a firm believer on scaling with mass compute, with mass parameter of the large language models. So there is a kind of a very interesting linkage between the two topics. So the course outline for today, again, we will come to the weekly news synthesis, and then we'll come to Sam Altman. I think we can call him the architect and of the abundance stack. So how he envisioned a human being or a human life of abundance. And of course, he is a controversial person, but we're today gonna try to evaluate him based on his thoughts and based on some of his past records. And lastly, we're going to talk about the compute data distribution triangle, which is probably an investment thesis we can build on if you imagine yourself as a venture investor. Okay, so about this week's news, we have been seeing this kind of trend recently in the past 4 weeks. And the same is that if we want to figure out what's the most important thing going on this week, especially across the globe, I think it's more about one, what is controlling data, what is controlling the distribution channels, computing power, and as well as the GPU chips and all the inference costs, the control, and the economics are being concentrated towards certain companies. So instead of seeing AI distributing across different channels, and we are seeing a large surge in the application, funding are going in the opposite direction, which is going to these very hardware-driven heavy fields. And secondly is that the market is rotating, and we have been seeing this kind of, I think, bottleneck for a long time. One is power, how important it is. For example, Sam has been investing heavily into fusion nuclear energy, and OpenAI is back in helium, which is also a nuclear fusion energy company. Then about inferences, I mentioned about inference last week to this week, it's still more or less about inferences. If you look at the case of Nebia's recent funding, and enterprise channels, meaning how we are integrating enterprise workflows already, and then comes to regulated payments, and lastly, the physical world deployment. And thirdly, we're going to see that one of the most important competitive edge for many companies nowadays is the intensive investment of capital, counting in billions, and that has become part of the moat for most of these large fund rounds and major construction projects and major, I think, computing projects in the United States. And lastly is that we are seeing faster acqui-hire, which is acquisition and hiring. We are seeing more of these incumbents absorbing AI faster than many startups hoped. And that means at a very early stage, seeing companies exit, for example, at $1 billion with a fairly good size to go to IPO. We are seeing at a very early times these teams are being acqui-hired, which is for the sake of not acquiring the technology but acquiring the people. And this trend by the incumbents is becoming more, is becoming gradually more frequent. Okay, so next we're coming to the first news, which is on OpenAI's battlefield. There are several deals going on in the recent times. One is that they are now pushing for a private equity firm deal with a guaranteed 17.5% return and early model access. So that's a very good term and a risky term for OpenAI, because that means you have to promise in the next funding rounds, for example, Blackstone companies or KKR or Silver Lake are getting like at least 17 or 18% of the return, and you also have to promise with the access of, for example, GPT-5.0 or 5.5 in order to satisfy the term sheets. And secondly is that they are signing deals to sell their computing power to US agencies, so government agencies, through Amazon Web Service. And thirdly, we are seeing that Microsoft is considering legal action over Amazon and OpenAI's collaboration on this ground, because Microsoft, in the very first place, they had a bigger, I would say, bigger share of the stock for OpenAI. This would directly impact Microsoft's own interest in the field. And because OpenAI has got tighter relations with Amazon, which is one of the competitors for Microsoft on several technologies, especially in cloud computing, etc., this will result in a kind of non-competitive terms. I wouldn't say violation, but there is this kind of thinking here. And lastly, for labs like OpenAI, Anthropic, they are becoming a business on distribution. So that means they are now trying to distribute their products to enterprises and to governments so that they can enlarge and to sustain the current spending as well as the current expansion size. So essentially, the frontier labs in the first place, in the past, their job is to break through the model capabilities. But ever since 2022, all the way 4 years later, we are seeing that they are more coming into pure application, building pure architectures, and building things that can deliver business value instead of research value. This is not just a thing with OpenAI. Many frontier labs in the US and in China have been getting less funding. For example, for Quan in Alibaba, they're getting less funding, and instead they are arranging a larger product management team to ensure that the Quan models can have the highest business value by the active users, by the user generated revenue in that sense. So we are seeing this kind of shift. Secondly, is that when it comes to infrastructure, many of the companies here we're discussing about is no longer about venture scaling, because at this scale, we can barely consider these companies like small startups in someone's garage. One example is Nambia's recent funding. They have a $4 billion convertible debt raise and $2 billion warrants sold to NVIDIA, as well as to Meta Data Center. This deal is going to be worth about $27 billion. What does that mean is that they are not essentially trying to sell the equities of the company. Instead, they are getting financing just like what project financing or infrastructure financing do. So it is out of the scope for infrastructure, for venture investing. And when it comes to the valuation, when it comes to the strategies or understanding how they work out, we should be looking into them as infrastructure investment. So the deal size, the deal structure will be on that end. And secondly is that from NVIDIA, they are going to give at least 1 million GPUs by 2027 to AWS. That was back in last week's GTC meeting. And with that being said, I think many of the infrastructure, they are now financed through customer prepayments, which means that many of the data centers are not being built in first place, but they are prepaid, and it's being funded by debt, it's being funded by strategic capital, and the companies in turn, they are giving multi-year supply commitments for their clients or for their investors or lenders. And given the size of how big these funding rounds are, one big question nowadays is power. And in the first time in years, I realized that power can be the biggest in this round of AI competition. So it's not the model company winning, it's not the startups, the agents winning, it's going to be power companies. So Google, for example, is buying up power companies and trying to build a nuclear plants so that they can support the Gemini system. But Helium, they are trying to 5 gigawatt by 50, 30, and then 50 gigawatt production 2035, especially for OpenAI company. And the global fusion rose 80% 2035, 2.6 billion. Because in the past, fusion funds is something in the lab, and don't really consider them as a very serious investment. But because of the bottleneck we're seeing relevant to energy, many VCs they're trying to speed up the funding rounds relevant to fusion technologies. So for many of the venture firms, energy grid and cooling they are being important as an AI infrastructure, and therefore there will be lots of amount of capital being invested in it. It's not just in the property market. I think in the property market is what looking at these companies. One company is called Quinta Energy. It has in the stock price in the past 4 years for about, I think, 400%. I checked the last time I checked it. If you think about it, it's like 70% or 80% growth per year, but we're not calculating the compounding. Because previously we are seeing companies like Tesla, they have their own robotaxi, and then for companies like Waymo, it's now testing out here in London, and it's also testing around in the Silicon Valley. They are primarily companies outside Uber, and they have their exactly different distribution channels. So I think when it comes to Uber trying to pick up their new suppliers, no matter it's from China or it is from the US, Rivian Clay's US companies, there is this strong need for Uber to outperform the other robotaxi companies. This could be because robotaxi are going to be disruptions to companies like Uber. If we are seeing the level of autonomous driving evolving from level 1 nowadays to level 4, and in the future they can also evolve so that we can ensure, one, the efficiency of the robotaxi, and secondly, the safety of it, then there is no more need for us to use Uber. So that is why Uber is now actively trying to invest into this field. And then, for example, companies Agile Robots is now having more collaboration with DeepMind so that they can get more synthetic data in the real world, and or simulation of the real world, to be more precise. It's a German company, and they have been primarily trying to have their robots being trained on the industry level, and so we are seeing more collaboration between incumbents company and the startups so that we can scale them faster. And Unitree is an interesting example because they are now seeking an IPO, and they have shared 5,000 plus humanoids already. So it is a leap forward. But one concern we do have for Unitree is that they are primarily used for research purposes, and that's the first thing. And secondly is that their other use is for performances. Apart from research and performances, we need to see other use cases on the industry level. So that's something we need to watch on in the future. And then we come to the news about exits. So just like I said, we have been seeing large amounts of acquisition hiring. And from the Department of Justice perspective, acqui-hires are designed to sidestep mergers and acquisition review. This is now being carefully evaluated because the processes for acqui-hires and mergers and acquisitions are completely different. So realistically speaking, it is easier for a company just to say we are acquiring talent, and it's going to be cheaper as well. But whether or not this way of acquiring is legal is now in the gray zone. So we might see restrictions on acqui-hires or acquisitions for the pure purpose of acqui-hiring. And then there is another thing going on is there is a K-shaped market funding going on, and AI companies are absorbing too much of the total liquidity for the time we are seeing now. For example, for Kata, which is a company that's recording all the data from these leading VC firms, it's covering 47% of the total funds being raised, and only 10% of the startups are capturing half of the funding, which is a concentration that we should be worrying about, because once they are getting too big to fail, that is questionable. And lastly is that I think for different companies, you should be careful with the default exit options. Many of the times we assume that we can directly get acquired, or we can go to IPOs. But in the recent times, there will be regulations are acqui-hire, and large corporates will reconsider whether or not mergers acquisitions is something of the best cost. So we need a credible path for many of the leading companies in the AI field to exit, not just for IPOs, but whether or not they can, let alone fund themselves through cash, through revenue, through profitability. And then I think we can look at some of the watch lists going on. If you're an investor, or imagine yourself as an investor, I think there are four fields that I personally feel it's very important to look at. One is energy infrastructure, just as we mentioned, how important it is nowadays, given this kind of bottleneck going on with energy. Secondly is inference orchestration. How do we ensure agents can be orchestrated at the same layer in a more reliable way? 3 is regulated money movement. So if you're still investing in a very decentralized concept on blockchain technology, it might not be the optimal choice, but instead we try to lean towards these regulated moves, for example, stablecoins and the recent Clarity Act and the Genius Act that has been passed on in the US Congress. And lastly is on vertical industrial AI. And we should be more cautious on, first of all, the undifferentiated companies. We are seeing, for example, in the education technology industry, there has been a number of ed tech startups, and they essentially serve the same functions. So that is why we will face fierce competition in these specific verticals. And secondly, it's a generalist humanoids with no deployments. That is also concerning. And if you look at companies that can be interesting, there are two things you can just search and look at. One is Gimlet Labs. They raised an 80 million Series A for a multi-silicon inference cloud. That is, inferences on the cloud across different types of chips. This will massively reduce the cost of inferencing and reduce the need for companies to set up their own data centers. And then 40 million for helium atom beam lithography. This is the kind of thing that we can help with designing chips at a much smaller scale. And in nowadays, I think the smaller the chips are, the more advantage we can have for very tiny devices to install their own large language models. So that's something also to watch out. So next, we are coming to the person of the day or of the week, Sam Altman. Everybody knows him, but I'm curious about his story. Turns out we're considering as like an architect-like person, and I think Altman, he is special because he built around his thesis, which I will introduce in the later times. And he has been repeatedly saying in his blogs that intelligence and energy are the two deepest bottlenecks choking we as human beings. And therefore, his priority are two things. One is to have sufficient amount of intelligence to top what we're going to talk about today, scaling intelligence. And secondly, to have more abundance of energy. So if we make both of these abundant, the ceiling on growth of our human civilization as a whole will rise dramatically. And also, he has been primarily a series founder. Before Y Combinator, before OpenAI, he was the founder of Looped, which later on didn't succeed that well, but later on he became a partner at the Y Combinator, and he started OpenAI, which at that time, OpenAI has got different divisions. One on vision, one on language, one on neural networks. They have got, it's like human beings, our touch, our taste, our hearings. So that was the very first time people were trying to build OpenAI, and that was their thinking behind it. He was also an advocate for basic income, which is trying to have a universal basic income for every individual in the future, so that we can guarantee the basic life of human beings. If we're living in a time of abundance of energy and intelligence that can take over many people's jobs. And he was also part of advocate of blockchain. He's trying to create something called proof of personhood, which is especially interesting about how do you prove yourself without showing your own ID using technologies. And lastly is that he is heavily bet on nuclear technologies and fusion technologies. Okay, so first of all, he started the Looped company, and that was one of his early lessons in his founder journey. It was quite a, I would say, it was quite a seemingly safe thing to do for him at the time, but he turns out to him in his reflections, the apparently safe path is often riskier than the path with volatility, and the danger for this company is that for himself is spending flexible years in the low upside system. So the market is trying to tackle on doesn't really have a very high ceiling, and this makes the industry both safe and also hard because you can have much more competition compared with anyone else. Secondly, it's about compounding. He should have chosen work where each year of learning makes future output more powerful. I've heard about similar views from founders I talked with in the past, and they also value this thing called compounding. The people you know, the knowledge you have, the same experiences operating, managing a company, it will compound over time. And then we have the concept of conviction and independence. We should have this kind of self-belief and pairing with seeking truth as our personal doctrine. And because with this kind of very strong self-belief inside our own thesis, it is very likely that we can have stronger conviction when it comes to building company, building thesis, and doing more stuff with our lives. And lastly is that solve hard problems. I think that was an inspiration not just from Sam Altman, but also from Paul Graham, which wrote equally important essay on why hard problems are the most crucial thing when it comes to starting a business. And it's interesting to work on. And recently, I think Paul Graham also wrote an essay using examples of Rolex watch and different watch brands in the competition times to tell people in why branding is a bad thing, why branding means bad competition, and what should we do. Then he turns back to his thesis. We should always work on the hard problems to start off at a startup or company. And when it comes to investing in people, investing in a thesis, for investors like you in the future, maybe try to see founders, are they trying to solve a very hard problem in the first place? Second of all is you can find a hard problem yourself. So and to find any founders who are interested in the problem you are also wondering about. So what is the abundance thesis by Sam Altman? Just like I said, it's basically intelligence and energy abundance will result in larger human progresses. And in this thesis, he tries to invest companies along with his road. One is the intelligence age. That means abundant intelligence and abundant energy could make extraordinary gains commonplace. Imagine like energy fees drop to zero in the UK or drop to zero in any of the countries that we are living in right now. This will mean factories can operate infinitely. This will mean there is going to be much faster investment and productions. And that is why this can create very extraordinary gains. And secondly, is scientific progress when it comes to abundance of intelligence. Because for capitalism, I think every past couple of years, there needs to be a technology that is driving the whole narrative for all the markets, not just the stock market, and to transform and to just change traditional industries. This is how capitalism survived itself. And therefore scientific processes is a strong driver for broad human progress. It's also a strong driver for maintaining the free market economy. And thirdly is super exponential value, which means that the economic value of increasing intelligence that we human can get access to will be exponential if we compare nowadays the parameters for GPT 5.4 Pro with GPT 3.5. It will be tens of thousands of times much more powerful. And for a phone, there was a data saying that in the 1950s, the computing power is 5 billion times slower than compared with an iPhone. So we're going to see this exponential change. Number 4 is that he believes agents are virtual co-workers, and this means the labor market with the abundance of intelligence and energy will also evolve as well. And And going on this thesis, he built up very different stacks, and which is a system of his belief, and he used money and effort to put on. One, intelligence, we are seeing OpenAI. Two, energy, we've seen his strong investments in companies like Oklo and Helium. Oklo went public last year. The stock price surged really, really well. And then comes to his belief on identity. So that's why he launched something called WorldCoin, even though it doesn't work that well. But the same notion is now being applied by Vitalik Buterin in zero-knowledge proof of human identities. And then we come into distribution of gains. So we should have basic income with every economies, and this will benefit every person, no matter rich or poor. And so I think each of these layers will address a bottleneck, and each of them are very important for human society. So about OpenAI, it was founded in 2015 from a non-profit organization, and then from 2019 they started to have a subsidiary created as a for-profit, and non-profit controls the subsidiary at the time. Elon Musk was one of the investors behind, but later on there were disputes between them, and he left. He sold all of his equities. And the claim is that frontier ambition and civilization responsibility, they are the key priorities for OpenAI at that time. And nowadays, of course, we are seeing very large amount of users. It's one of the fastest companies that reached 100 million users in the world within several months. And the same applies to the revenue growth rate. And lastly, we are seeing that there was a 2023 board crisis where major scientists at OpenAI, Ilya, as well as Mira Murati, they left the board of OpenAI, and they tried to expel Sam Altman. But then Sam Altman came back still remained as a CEO, so Ilya has to leave the company, which proves that Altman is not just a technologist; he's also a political figure within a company. So essentially, he is. I think he is a very political CEO, in a sense that if you consider politics as the distribution of human interests, and yeah, I think so. Altman is this kind of node where technology, commercial, and institutional power converge with each other. So then we come to his energy thesis that we just mentioned about. We draw this triangle. That is interesting to me personally, is that if intelligence becomes a first order strategic variable, which means that to ensure AI to have continuous development and infinite supply, energy should be operated like water on a daily basis. It should be get access to whenever we want, which is not an easy thing in many countries. For example, here, I think studying the UK, to me, energy cost is one of the biggest because of the Russian-Ukraine war, and similar things also happen in Germany and other European countries. So we cannot, we simply shouldn't take these energy for granted. And then comes to his very interesting idea on identity. There has been many technologies trying to solve the problem of identity, and he launched something called WorldCoin. But that was an interesting idea because it was, first of all, for the proof of personhood, to prove whether or not we are a human if an internet is full of AI agents. But also, it was a need to fund OpenAI themselves to launch an initial coin offering during the bad times of the funding runs, because there was a time where OpenAI doesn't really have any money to expand themselves. So on the one hand, he has a very deep trust for how do we use a global digital passport to prove our identities on the internet, so that we can trust an operator on the internet as a human being, or certain AI agents belongs to a certain human. But secondly, to build up this kind of network, to try to launch a coin. So that was an interesting controversial story. And then coming to his belief, there was a Moore's law for everything. Moore's law is basically the exponential growth of how traditional chips or semiconductors can be. And he thinks that there was a Moore's law for many things. For example, if AI creates enormous value, how do we distribute the upside broadly enough that the system remains stable? That's an important question, right? And then we come to how value creation applies to Moore's law. So in his thesis, AI drives massive economic growth. So that is why he should ensure the scaling of the entire AI economy. And secondly, ensuring the system is stable overall. And to ensure the system is stable, that's why he tried to launch the concept of UBI, because I don't think he's a saint, but to him, because giving guaranteed income to every individual can make sure people don't turn violent or don't turn into criminals. So that is why you should have a UBI and very cheap goods for the satisfaction of the majority of people. Same applies to the CEO of Uber, even Microsoft, Bill Gates. Many of these people, people consider themselves as people are considered as assholes. Why? It's because the CEO's job is to decide what the company should do and then make sure it actually happens. And in that case, you should be one is very clear, but secondly is that you should be relentless in many cases. And his very important job is to be repetitive in execution and to be the evangelist. It's like a religious thought, to be the evangelist within a company and to unify the thinking of every single employee. So I think CEOs shouldn't be just a genius. Genius and CEOs are different things, but they should amplify signals to every single person, users, and employees. And the final goal is to make sure organization direction is legible to every stakeholder until it becomes a reality. Along the way of building companies at this scale will result in a large number of conflicts, not just with your competitors like Anthropic or Gemini. You will have conflicts within your company that disagree with your own vision. And in that case, in 2023, that's what we see. And he won. So in that sense, he is a stronger leader compared with Ilya. Ilya is a very outstanding researcher, but doesn't mean that he is capable enough to become the next CEO for OpenAI. And that's why he started another company called Safe Superintelligence. But right now, we are not seeing new progress going on with Safe Superintelligence. No one knows what he is working on right now. But yeah, that's outside the topic. Overall, if I want to see what he inspires us about how a CEO should be like, you can consider him as an evangelist, or in a more common sense, as a salesperson. Essentially, you are trying to sell your company's idea through very repetitive work. And trying to connect to part one, so we are seeing that OpenAI maps directly onto the compute data distribution triangle. And this is the case I would like to talk about in the next sessions. And then what VCs can learn about Sam Altman is that if we consider his career as case study for convertibility, then we can see a very clear life path. So he converts convictions into building institutions, and you convert usages into signals so that, we are now using reinforcement learning with human loop functioning data, and you convert signal into outcomes, and lastly, you convert outcomes into economic control by essentially building up everything that is used for monetization of the company. So we should always look at founders that think like, is this convertible to the next step? What does it convert to? In this kind of conversion trains instead of isolated metrics for a founder. Okay, so now we are coming to the compute data distribution triangle. So what does it mean? Previously, we have something called the scaling law. Scaling law is essentially an equation combining parameters of the model with data and compute, which means that we can scale up a better AI. This was the old narrative for AI companies and explains the progress since 2023 to 2025. But I think this kind of narrative is eventually hitting to an end. First of all, this is a technology narrative, and second of all, if you want to convert this kind of narrative to how we build sustainable and durable businesses, then we need something new. So that is why there is a shift in the ideas from building intelligence to organizing the system of having recurring control, getting feedback, collecting new data, and then create better products, and then to strengthen our company itself. So that is why in the recent times, we consider LLMs as an industrial system. And there was once a person saying, if it's still in college, we call that research. If it's bringing from 0 to 1, we call it startups. And then if it's scaled up from 1 to 10 or 1 to 100, we call these people not as researchers, nor as startup founders. We call them the industrialists. And a model is essentially an artifact. But to turn a model into an industrial system, then we should be able to combine the computing power of the company, which is turning capital into usable output per dollar or per watt, combine data. That means how do we govern the supply chains of quality signal instead of the raw token volume? And lastly is distribution, not just giving advertising. Advertising is part of distribution, but it's not the entire picture of distribution. How do we build a monetization engine and a feedback engine that determines who survives at a larger scale? So this is a difficult thing. Many companies are failing at this, even very famous ones. So what do I think about this system? For compute, what does that mean? Oh, that means about silicon, about packaging, so assembling GPUs, networking of different hardwares, and lastly, to have sufficient power. Compute will determine the level of distribution we are getting. What does that mean? That when it comes to workflows or monetization of signals, they will have an incurred cost, and computing power will directly be able to determine the prices and the unit economics of many parts of our distribution. And distribution is also really relevant to data because in the future, we need high quality data. And that depends on the rights our company has when it comes to building our refined products, the quality of the data we're collecting from our users, the alignment of all of these data, as well as with the compliance issues. And lastly is the feedback we're getting from our users directly to reinforce our own products. And then computing power is make sure that this analysis of data is efficient. So in itself, for successful companies in the future, you should either take one of these little vertexes or little dots on this part so that your company can sustain for a longer term. And the industry as a whole will formulate into a triangle system. And this is what just we explained. So when one constraint eases, the pressure is going to move. So which means that the constraints will never simply just disappear because it just eases out. For example, when it comes to the GPU throughput, we have more efficient models shifting bottleneck to packaging. And then the problem will just go to packaging capacity. That being said, how our company can package the power, the capacity, the chips into something that is deliverable for inferencing. And let's say you did a good job in doing the packaging, your company does a good job for that. Then comes to the problem going on with power and site readiness. We have very strong GPUs, we have very strong hardware already. Do we have the place? Do we have data centers? Do we have the sufficient power plants? And then once you have all the three stuff in the above, this will give pressure to the next part, which is data rights and quality. So given that, okay, you guys have been doing a good job in building infrastructure, do we have enough data so that we can deliver the best products? So step after step, you are going to see that if one constraint eases itself, the pressure will directly move to the other constraints. And therefore, there are hard problems where we are trying to solve in every single phase here. One is about the compute. But I will try to make sure that this is easy to understand because we are, at the end of the day, we are not silicon engineers. We're not chip engineers. We are trying to become investors. So compute now spans through 4 different layers. And this is why we call this part of the packaging processes. We have the silicon. We have the packaging of memory for building the HBM or chiplets or 3D stacking. And then you start to build up these networking system that ensures how smooth it is going to be for our hardware to communicate with each other. And lastly, we need to have a stronger system of power. And the power system will, on the other hand, support the networking. It will also partly support the packaging and memory of of the computing power. So from the International Energy Association, data center electricity consumption will double by 2030, and we are not having sufficient amount of one, data centers, and two, power. So we are in shortages, essentially. And major US hyperscalers from Bridgewater Associates data is expected to invest $650 billion in these four aspects in 2026. For NVIDIA, they are claiming themselves to be receiving capex of $1 trillion. I'm not sure if that's going to come true, but 650 is a number that makes sense. So what does it mean when it comes to the problem with packaging? This is just a simple picture about how we can explain the entire compute system. So for companies like TSMC, they have this thing called the CoWoS system, and this is integrating these logic chiplets and the HBM stacks on a silicon interposer. So it is a package itself. It's not saying that we need a chip. It's an entire system on a chip. And that's a difficult thing, and that is also one of the key things, reasons why TSMC has been doing particularly great job in the stock prices, because they own the entire manufacturing processes for these very complicated systems. And packaging remains the bottleneck, even as overall semiconductor capacity expanded. We are seeing there is going to be major competition between Samsung company, SK Hynix, and Micron in South Korea on how to build better HBM generations. And advanced packaging is becoming essential because traditional transistors are scaling at a lower rate. So in this case, it means that pricing power is, I think it's not just about having AI chips companies now. It is also about what are the companies that are good at doing the packaging to build up this complete system. And these packaging are the real stuff that serves the computing power. And next, once we solve the problem going on with computing, we need to solve the problem going on with the networking. At a cluster scale, interconnect becomes the governing constraint on utilization. I think last week NVIDIA has been talking about this in the GTC meeting, but the key thing is that NVIDIA needs to give out much more amount of products that serve as massive GPUs, that serve as that can serve as faster connection between different GPUs, and this will become one of the walls we might see hitting when it comes to the hardware constraints for many of the companies we are building right now. And without solving these constraints on networking, it is not realistic to say we are going to have an abundance of intelligence, and not just saying that, oh, we want to scale intelligence to come in 5 to 10 years. So that's also a hard question for companies to solve. One interesting case study that we have is a company called Light Matter, and it is doing. It was founded in 2020 or 2021 by a couple of scientists at UC Berkeley, I think. They are baking light chips, and basically it's a photonic chip, and they interconnect with each other for chip-to-chip communication, which will maximize the speed for computing power. So their thesis is that the pure expression of networking and packaging are part of computing, and to ensure we can have the best, the best performances of these chips, probably we should use new technology, for example, like photonic technology. So that's why they're trying to use photonic interconnects for AI supercomputers. Another way to solve this question is to use heavier compute infrastructure in itself. Crusoe, for example, they are building a fairly large amount of AI data centers with direct liquid-to-chip cooling, and usually they're going to be very near these these energy plants, and they have been raising a large amount, I think 4 billion already, and they are building in Abilene campus with 1.2 gigawatts of processing power. And they are also building OpenAI's first major US data center. So apart from the project Stargate, Crusoe is also running on this massive infrastructure And this is also part of the packaging story we're talking about when it comes to ensuring a sufficient amount of computing power. And that is why many companies are investing in Crusoe or in light matter. But then I do know that this industry can be very capital heavy. And for us, as if we want to do invest in these fields, either you become an institutional investor or probably just buy more stocks in TSMC, because so far they are one of the best companies in the packaging phase. And also you want to buy, if you want to buy more companies focusing on the HBM constraints, try Samsung and SK Group in South Korea. Okay, secondly, constraint is data. So the valuable data of the next phase is should be governed, refreshed, attributable, and tied to real decisions. We are going to see that in the past, in the pre-training times, we just scroll the webs and books and code. They're getting diminishing marginal values. And there are companies trying to say, what if we just use synthetic data? But in fact, I think in order to build up very strong products, synthetic data quality cannot satisfy our current need. And we need human feedback and signals to ensure things can be attributed and governed in the right way. And then thirdly, coming to enterprise documents, we are seeing these companies that are building in the form of RAG. RAG is basically a retrieval system that can help build libraries within the LLM. And lastly is that for many product builders, we should have the very strong data flywheel. And what does it mean by data flywheel? Because lots of people, when it comes to pitching, they would mention this. Data flywheel is essentially using the user's feedback to gain their personal data. For example, their usage habits, their feedback. Well, at what time in the whole day they are more active in using the product. And this one can all be collected, and then we can make adjustments to our products. And this is something we have been trying to working on in the past few, maybe a few months, or maybe in the past 2 years already. And one of the critical constraints is that for Epoch AI, they are doing very nice market research. They estimate 300 trillion tokens of quality-adjusted public human text. And the frontier models could substantially utilize this stock between 2026 to 2032. So far, we are having still some kind of storage of these tokens of quality-adjusted human text. But after 2032, we might see some differences going on, and people need to figure out if they still want to train. And so one paper from Nature says, recursive training on model-generated data degrades the underlying distribution over time. So that's why I say synthetic data, one of the solutions we're trying to use is not a very optimal answer to our data walls or data constraints. And this will create a strategic premium on genuine human interaction data. And I guess that's why some companies like Macquarie can still get sufficient amount of, I would say, revenue or very fast growth, and for Scale AI being acquired by Meta as well as for Databricks, is because there is a premium on genuine human interaction data. And provenance technology that separate human originated signal from model-generated noise is now turning into a critical infrastructure. So the implication is that the most valuable data is often generated by distribution on your own channels, through your own products, and then curated into training pipelines. So in that sense, when it comes to training stuff, we should no longer be using these public data. They are noises. Instead, just try to use the user-generated data to bring about this kind of feedback. And next, that's why we think data is now moving from having crawling all the websites to contracting. One reason, of course, is about laws. We are already seeing a large amount of licensing deals on Reddit and Google, OpenAI Financial Times, and on New York Times and Microsoft and OpenAI to train data in active litigation. Another company that's interesting is Open Evidence. They are specifically working on the medical industry, and what they do is that they use all the proprietary data from the top medical magazines and the top medical schools, just to make sure that they have the sufficient amount of high quality data to serve their clients who are medical students and the top universities, as well as the top hospitals across the world. So data now has already formulated a market structure. So the relevant question is about how much data do you have, and how you can legally use the data you have, and how you can legally refresh it and attribute it to the person, to a phenomenon you observe on user behavior. That's something going on recently. One example for these two is Databricks and Scale AI. I will dig a bit into Databricks. In the past, Databricks has been a company primarily focusing on lakehouse structures. And what does a lakehouse do is to assemble all the data for enterprises so that they can be organized in a much cheaper way and also an easier to use way. So it's easier to use than Amazon Web Service, and it's harder to use than Snowflake. But gradually, Databricks has been improving their product structure, and they have been doing a very good job in the recent funding rounds. They have been going to Series J now. And coming to the AI era, they started off in the cloud era. So they transformed themselves from purely a cloud platform to a unified platform for data analytics and AI, so that many companies that tries to train themselves or tries to get very nice data or high quality data, they will clean the data, refresh the data, and analyze them purely on the Databricks website or on the platform. And lastly, something I believe in is on distribution. In the past, we always say distribution is about sales, but I think essentially in the AI era, distribution is not about it's not just about sales. It is about where the intelligence we're trying to scale operates. For example, is it in the workflows? Is it in the services? And secondly, whether inference costs can be spread, which means that as we distribute across more users, can we drop the inference costs? Because in the past, the marginal cost of content is zero on the traditional internet ages. But in the AI ages, the more users using your product, the higher inference costs are going to face. So I call that the success tax. So the more successful a company is, the faster you're burning money. And lastly, which interactions become proprietary feedback. So I think a product that works out in the workflow is that they should control workflow with highest value data. So that is why law, finance, e-commerce, they are all very nice workflows, coding as well. And the product that controls the highest value data often improves faster and with better economic values. And when it comes to that, that means the revenue again, and also means that the cost is going to drop. So, but when it comes to building platforms and distributing your products, there has already been several huge companies dominating fields. For example, as a browser, as a productivity slot, as an assistant slot, they're all being claimed by the big incumbents. One is Apple. They have been integrating Gemini and GPT into Siri across iOS. And when it comes to Apple Intelligence, there is a possibility that Gemini will directly have an access and have a competitive edge in this kind of distribution channel. And then for Microsoft, they just directly use the Copilot in Windows 11, in Bing, in Edge. So they get an advantage to many companies. And for Google, they replaced the assistant with Gemini and Android, and Gemini has been embedded in every single workspace on Google. If you look at the Google AI Studios, it's very interesting to play around with. And so this is an example for large traditional companies capturing successfully on the default distribution channels. And for startups, this means the default consumer distribution is dominated by platforms. And the best startup terrain is not to go to these platforms on distribution, it is to go into workflow distribution, context infrastructure, and bottleneck infrastructure. So I think not all distribution is equal, and there are different types of them. The default option, of course, if you can get one, is the traditional distribution channel across the operating system, the browser, the suite, the app store. But it's hard for startups to control these distribution channels because they have been controlled already by the platforms. But then I think secondly is on workflow distribution. This means that how you can embed a product in very repeated but high value work. Let's say built in DC app model using companies like TraceLight or Index, and merge them into your daily workflows. So the durability of that is strongest for startups because that's generating proprietary signal, and also because the clients don't really trust having everything on the platform. So that leaves an edge for startups to work on. And a third is a demand capture distribution. Users will come to you directly, but they are not deeply embedded because it's like a one-time thing. I have a problem, I have a question, I ask it out, and then I got the answer, I get the results I wanted to be delivered with, and I left. So it's often less durable than what the founders think about. And so I believe that workflow distribution is still where startups has the best chance to gain a position. It is also where the data flywheel is strongest. One case study is an ACC-backed company called Abridge. It's similar to Open Evidence, but they are trying to scale up clinical documentation. So essentially, you're going to see that it's not a company just focusing on medical data. It just focuses on streamlining a very small part of medical care, which is the clinician data cleaning, because usually clinical data is very complicated and very repetitive for interns to work about. So the core loop they are building is, you as a clinician, you give the input, and then you process it, they evaluate it, then they structure it. And during that phase, it can also improve the models for companies like Abridge. So weekly, they are processing 1 million plus clinical encounters across 150 health systems already. And primarily, they are doing a great job in a workflow inside the clinical documentation. And once this becomes a habit, traditional clinics will abandon the traditional SaaS-based software. Instead, they're trying to use these workflows to streamline every single operation they're doing. And secondly, is that they are getting proprietary clinical interaction data. So at first, I said Bridge can just work on clinical processes, but then next year you can just directly start to work on medical data or work on deeper scientific discovery stuff. You can have this kind of imagination here. Why it fits? Because it has a very high frequency. It's got high stakes in workflow, and the usage is giving out very structured signal, and this will entirely give you better outcomes. So I think this company will be very successful. Another example is Harvey. It's a legal workflow with a very strong distribution advantage. I think one thing they're doing particularly good is that because legal research, due diligence, and deal management has been in the past an important aspect, but also something that is very challenging and repetitive for many of our speakers. And then, in that sense, for companies like Harvey, the biggest advantage is the reliance of lawyers on these workflows to streamline everything. And people always will ask, why don't they use ChatGPT, or why don't they use Anthropic? Because Anthropic has got co-work as well. The reason is that you shouldn't, or for companies like them, they don't really trust a centralized large corporate. They want to trust another centralized corporate, but says we specifically serve you for law. And from the perception of lawyers, or from the perception of these clients, maybe the usage won't be that much of an improvement, but since they are embedded deeper in the workflows, they will have stronger advantages. And next is Glean. Glean was started in 2019, and I think one thing they're good at and they pivoted in is to build a very successful agentic workflows for enterprises. And how did they build that thing? It's because in the past, they have already built up enterprise distribution channels across such a large amount of clients. They have got sufficient amount of context of different large businesses, especially, for example, if you are, let's say, Mondelez and you use their product, they will have the entire context of your company. So that is why over time, when companies like Glean tries to turn themselves into an AI platform for workflows, they had a very strong advantage in it. And the same thing can maybe apply to Salesforce. If Salesforce managed to use the same method to reinforce their products, then they can also be not challenged by newer players that's trying to overthrow the SaaS field. Another two companies that I recently noticed that I think are worth looking at, one is called Trace. Trace, they just raised very, very little, 3 million recently. It's essentially a workflow orchestration routing task between AI agents and humans. And I think what it's particularly good at doing is to create a workflow context engine. And for example, if you fit it in your Slack workflows or in your like Jira workflows within your company, it will adapt the problem directly and it will see the context. And I think that is why Trace has become a very interesting thing, because it can seamlessly get integrated into our own workflows. And secondly is for companies like Resolve AI. Resolve AI, its job is to work for autonomous AI SRE. What does that mean? Is that they respond to incidents. Let's say there is a bug going on with your website. Resolve AI can come in, loop in, fix the problem, see the problems here, and then it will get the data of what problems will emerge because of the structure of the code base in our company. So it was going to have very strong distribution because of this simple reason. And it can also replace hopping between dashboards with conversation of root cause resolution, and it can also generate structured diagnostic data. There is also a company in Columbia University funded by two professors called Traversal. It's doing a very similar job. And I think this is particularly interesting that people are finally getting into these very hard problems to solve. And each of these very small problems will eventually turn these companies into real companies that has a competitive edge on the distribution channel size. So that is why I think a durable AI company owns one of the vertexes and pulls a second into the orbit and makes the loop compounding. So, for example, if you are a distribution-led company, your usage will produce proprietary signal that improves retention or accuracy. For a data-led company, you govern the context that is embedded directly in the workflow. For a compute, is that you have a bottleneck, right? It becomes unavoidable and hard to route around. And once one scarce vertex is being done, you can pull a second one, and then you can loop compounds, and you become less substitutable over time. So instead of saying our technology is the best, I think nowadays figuring out the new form of distribution channels in the AI era has become much more important for the success for many startups. And I think, how do we prove this theory? There are 4 stages I want to introduce. One is called the wedge proof. So does the company present a high-value decision point often enough to matter? Is it a very painful workflow? Many companies does the same thing. Coming to the second stage is that does the usage turn into proprietary signal? Can you see that in their startups when it comes to doing the due diligence? If not, then we just pass on the deal. If it's doing a very good job, then we can switch to the third stage, which is the economic proof. For example, does the loop we're creating improve faster than the cost structure worsens? Because the cost structure is always going to worsen as we get to more people using the products. So we're just trying to test whether or not it's an economically survivable demand. And lastly, is that does the company position strengthen as the ecosystem matures? Has it improved from one vertex into at least 2 vertexes? For example, at first you get started with, let's say, distribution on workflows, and then you expand it towards data. So is there this kind of expansion of the different vertexes for this one startup? There are 4 stages to prove it. So I think we can define several metrics to separate real compounders from impressive demos. One is how deep does the product sit in a people or in a company's workflow. 2 is how dense does the signal present to you like? So what fraction of interactions generate very usable signal? Number 3 is that how is the learning velocity going on with this kind of feedback loop? And number 4 is how is the cost per successful outcome? Is it dropping? Is it maintaining at the same level? And lastly, is the margin improved through optimization, or is compressed at 5 times the usage? So how resilient are the profit margins be for these companies? And we're trying to use these metrics because when it comes to growth stages, these will be the key questions for many investors to think about. And that is why I think for a real winner in the AI field, especially when it comes to the concept of scaling intelligence, there are three things that are essential. One, distribution. Two, how quickly does the product learn itself? And three, how quickly does cost per outcome fall? For example, if we can have a company that is fast distribution or slow learning, that's basically a wrapper. You can have fast learning company with very, very weak distribution. That's a very strong lab. That's not a company. You can have fast distribution of learning, but you don't have efficiency. Then it's an adoption without durable economics. And lastly is that your company has got growing workflow gravity, fast learning, and efficiency. That's something a founder should always try to aim. Okay, so there are three zones where this triangle can compound most clearly. So I divide them into three different types of company. One is compute bottleneck infrastructure. We have Light Matter, Crusoe, Coviv, Astera Labs. For zone 2, it's about workflow and native vertical AI. That's companies like Abridge, Harvey, Glean. And then coming to zone 3, it's about how we can get data being governed and how we can build a very solid context. That's about Trace, Scale AI, Reddit, Databricks. So Reddit just went public last year. And if we are seeing this kind of usage of how Reddit data is being put into training and how Reddit controls the fair amount of data that is essential for AI companies, you can probably buy some Reddit stocks. I can also try to build a thesis on that. But how we may fail, in some cases, how I can fail. One is that there can be companies with rented models, rented data, and shallow distribution repeatedly outperform firms with stronger loops. That means your company's got very light model, and we might see this kind of company coming up in the future. Number 2 is strong usage does not produce proprietary signal that measurably improves retention, quality, or economics. Number 3 is algorithmic efficiency compresses compute costs so far that infrastructure ceases to shape the deployment, which means that we have very strong efficiencies, but infrastructure cannot really catch up. That can also falsify this feedback loop. Lastly is like, if we do have the right cleared and governed data, but turns out to be matter far less in enterprise buying than current evidence suggests, then we can also fail, which means that all the money we spent betting on these governed data turns out to be useless to many companies, then we can also falsify it. So from this framework, what kind of company are we trying to back? I would say back companies that begin by owning one vertex, can produce signal capture inside the real workflow, and can convert that signal into measurable improvement quickly, and can lastly hold or improve margins as our distribution scales up. So I think the future of AI scaling is never going to be through model brilliance, but through the compounded interaction of compute, data, and distribution. So compute buys the capability, data buys efficiency, distribution buys the right to exist at such a large scale, because it finances both compute and generates the next tranche of proprietary data. So yeah, that is coming to the end for today's session.